We are a week away from the next Fed meeting. With jobs running hot and inflation still elevated, our next guest says that interest rates should rise another 50 basis points. Joining us right now is Jason Furman. He served as the chairman of the Council of Economic Advisors under President Obama and is an economics professor at Harvard's Kennedy School of Government. And Jason, first of all, it's good to have you in studio.
Great to be here.
So let's talk about what you think, another 50 basis points. That's what you think they should do. What do you think they will do?
Yeah. Now, first of all, I feel bad. I feel like I just repeat myself month after month with my views on this topic. But there's a reason for that. The data keeps being the same month after month. And when the data doesn't change, your views shouldn't change. I think they should do 50 basis points over the course of this year, by the way, not at the next meeting.
Not talking now. Do you think it's
but I think they're going to skip. But I think they'll skip and they'll raise the dots. And the question is, do they raise those dots by 25 or 50 basis points?
The jobs data hasn't changed, but we've had lower inflation year over year almost every single month.
Lower headline inflation. That's all because energy prices were rising, which I never believed was a problem. Now energy prices are falling. I don't believe that's a good thing. I look at core every month. That's been 4.5%.
Is it wage? So do you think it's still wages and labor? That's what's causing it. Why was it taken as a kind of a Goldilocks number on Friday, even though it was so strong? Was it the 3.7 unemployment rate, or? I
mean, Friday was a little confusing because you had the strong establishment survey, you had the unemployment rate go up. I don't think it was Goldilocks. I don't think. Most people's recession forecast probabilities have gone back down. I mean, the most forecasted recession in history hasn't shown up. But I think it's the inflation is just embedded. The wages lead to prices. The prices lead to wages. And it has its own momentum now, and that's not going to.
Is a recession success in your view?
Is a recession a success?
No. Is recession what you would view as a success for the Fed?
I mean, success would be if they get lucky with a soft landing, but they don't get to choose whether.
You see, it's kind of warped, though. I mean, the people that really want them to keep going are disappointed we're not at 5 or 6% unemployment. That's just such a crappy way.
I mean, it's hard to look at those jobs numbers and not be happy.
It's the only way to do it.
But, that's the only tool they have. That's the only tool we have. I mean, unless you support price controls.
You mean like minimum wage?
Maximum wage? I don't know. Maybe like a maximum wage check.
No, I remember those. I had a whip inflation now button. You remember there were price controls. We tried it. Jimmy Carter tried it, or was it Jerry Ford? I can't remember.
And they don't work. So this is what we do now.
Well, we do it with pharmaceuticals now.
What you think the Fed is like-minded with you? Because for a long time it felt like you were kind of pushing them. I'm not sure that's the case anymore. I think Jay Powell seems to have more of your mindset.
I mean, that committee is pretty divided right now. I mean, you're going to start to see dissents, either the doves who don't want to raise rates or the hawks who are wondering why they're not raising them anymore. So he has a more difficult management job. I think they really, really set everything out for a skip. I think the jobs number was mixed enough that they can continue to defend that. They're going to get the inflation number the day before the meeting. I don't think anyone wants to change their plans the day before the meeting, but it could be a pretty hot number, that next inflation reading.
If we were to raise rates the way you'd like to see them raise, do you think the banks could remain stable?
Look, I think the best thing for the banks is to get the macro situation stable. If we have 4% inflation for the next couple of years...
No, but I just wonder whether you think the Fed should take into consideration whether if they were to go 50 basis points at the next meeting and then do another 25 or 50 based on your sort of supposition, there might be banks that could go out of business. I don't know if that is an okay thing, a good. I don't think it's a good thing, obviously. How bad is it? And how do you think about that?
Look, Fed has two things with the banks. One is, are the banks going to affect the economy and inflation? Absolutely, they need to take that into account. Right now, that credit crunch is looking like it might be a little bit less bad than we feared a month or two ago. Part of the reason why I think we need these rate increases. The second is, what's the impact of their policy on the banks? I think where they mess up the banks is when they lose control of inflation over a sustained period of time.
What do you think the unemployment rate needs to look like in the United States to become, quote, stable?
I don't know. Look, if you want to get inflation to 2.0, I think you need an unemployment rate in the sixes.
In the sixes?
If you want to get to 2.0.
Okay, hold on. That's big. That's a massive shift from where we are today.
Right. I don't think we need to be at 2.0, though. I think if the Fed gets to 2.99.
Okay, but to get to 2.99, do we need to be at 4.5? Do we need to be at 4? What is it? What is that in your mind?
I would guess around 4.5 to 5, and these things are super hard to control.
And is that politically palatable?
That's why we have central banks, is to make tough choices. They haven't, the inflation mandate helped our economy over a period of decades. The idea that we just sort of give up and say we're fine at 4.5% inflation.
I'm not disagreeing with you. I'm just saying these, to me, underneath it, that's the fundamental issue, right?
Yeah.
Because what you need to do is cause massive, not massive, but on a relative basis, what would feel like massive unemployment.
There's no supply side way to do this without. It seems like an unwieldy.
I'm sure you'd love to try tax cuts as a way to bring inflation
less
down.
regulation,
Which maybe you could find a Democrat and do big infrastructure spending. So you could do tax cuts, infrastructure spending.
All those things are inflationary. That's
just not how it. That's not how it works.
It's all and when you have higher interest rates, you can't start businesses. Entrepreneurs have a harder time providing the jobs that you need. You need more jobs, more people to go into the jobs. You need the people to start businesses.
Look, we need more supply, but supply is slow. We do not have any lever that can raise supply by a lot on a 2-year time horizon. The only lever we have is demand.
Like we use a bazooka when we should have it like a dart. For what we want to do.
I mean, the longer you wait, the bigger that bazooka is. I mean, the whole point
That's
of going
if you believe
earlier,
we're like in the 70s, and I just don't.
Well, we don't have.
You thought it was energy. You thought it was energy.
And
supply chain and pandemic reopening.
No one's here talking about raising interest rates by 10%.
You don't think it was from overspending for the past 2 years either. That's not what caused it.
Oh, that it was overspending. It was the Fed, and it was some bad luck. They all combined. Regardless of the cause, we are where we are now. And the longer we wait, the more that unemployment we're going to need, the bigger the bazooka we're going to need. That's what they need to try to avoid.